Welcome to Dubai Real Estate Unplugged, brought to you by the team here at House & House Real Estate. I'm Luke Remington, Managing Director for the House & House Group, and today we're going to be discussing the rising rate of mortgage rates here in Dubai and what impact that's had on the market and how you can use these conditions in your favour. So we're going to cover mortgage transactions, why they're increasing, and general guidelines for financing property in Dubai, how mortgage works for different property types and readiness, and what you might need to consider as an expert when it comes to mortgaging. It can be sometimes, one of those concerning factors that when there's large amounts of money coming into it, lots of questions and lots of concerns as when you're buying a property. So we're joined by Tanya. Welcome to House & House. Tanya, you're known very well to us. We got on extremely well. You're our go-to mortgage consultant. Tell us a bit about yourself and essentially what is a mortgage consultant?
Good morning, Luke. Thank you so much for having me on today. So a little bit of background about myself. I started my career in Australia, Melbourne, where I grew up. After completing my degree in banking and finance, I started working with one of Australia's largest banks. And for majority of the time in my role with this bank, I was, home finance manager, and I was looking after clients and their mortgage requirements. A few years into that role, I decided it would be a good idea to go out and be able to offer clients more than just one mortgage product. As a result of that, myself and a business partner decided to go out and start our own mortgage broking company. The good thing about that was we were able to still do what we love doing, and that's assisting clients with mortgages. But we had, a vast variety of different options and different lenders that we were able to offer. The reason why I came out to Dubai was since 2007, I have family here and I used to visit. As you do, you fall in love with Dubai. I think we all know that story. Decided in 2013 to set up my mortgage consulting company. Started approaching lenders out here. Since then, I've been able to assist a lot of clients with their mortgage requirements. So good question, why would, what does a mortgage consultant do? Basically, the idea of going through a mortgage consultant versus going direct to the bank, working with a consultant, saves you time and money. And it also just saves you the hassle of running around and understanding all the different products in the market. That is a very time-consuming process for an individual to do. Yeah. As consultants, we have, a vast variety of different products with different lenders. And we're able to, initially just, understand the client's requirements and their situation in order to recommend the best product that is available to them. It's very important because, a lot of banks have different policies, and sometimes a client may approach a bank thinking they are the perfect candidate for a loan, only to be rejected. But when, they consult with someone like ourselves, we're able to really understand their situation and place them with a lender that, they do fit in within that policy. Yeah. Very common. We've seen people who've been rejected from lender A. They come to us and we're able to fit them in within a policy of lender B.
Yeah. No, it's by the sounds of it, you put a lot into that. Yeah. You definitely need a mortgage consultant. I'm quickly going to bounce over to Charlie. Charlie, you're known on the podcast. You've actually been in quite a few times. You're managing a large team here at House & House, the sales team. Tell us a bit quickly about you.
Yeah, so I work quite closely with Tanya, as you can imagine, because we've got lots of buyers purchasing with a mortgage, and it's always a pleasure to see her name on the deal sheet, if I'm honest. And just to bounce off what Tanya said there, I find that what's reassuring when I see your company mentioned is I know that the speed's going to be okay for the transaction, because obviously every sale has an end date, and sometimes buyers struggle to get things processed in time to meet that end date. But I always find that you seem to keep everyone on track. So that's what's really reassuring when I see Tanya and AFB Global.
Thank you, Charlie. Yeah, no, it is, it is quite a challenging task to sort of stick to within those timeframes on, we are relying on third parties, but we do just ensure that we are following up with the bank. The key is follow up, constantly updating the client on the progress of the loan, because I feel it's very important to be transparent with the client along throughout the whole process.
Yeah, no, Tanya, let's get straight into it. In your professional opinion, is it easier to get a mortgage in the UAE? You mentioned Australia, so we can talk about UAE or Australia or maybe UAE or, I don't know, UK or somewhere in Europe. What is you speak to a lot of clients that, they're expats, they've come from other countries. Do they ever say, Tanya, if I was doing this at home, it would be like this, or it would be so much easier? Or are they pleasantly surprised because they found you and you're very good at what you do? What is like compared?
Yeah, it's a good question because having, done this in Australia, it's a lot harder, especially these days with the regulations to get a mortgage in Australia. Things like stress tests, understanding, the individual expenditure of the client. Things are very much broken down with the expenditure. Out here, the central bank guidelines, I feel, are very fair. And I feel that, most banks do have an appetite to lend. It's a simple process. It's basically 50% of the salary can be allocated towards the client's monthly repayment, the new monthly repayment of the mortgage they're looking to apply for. And in addition to that, we include any existing loans or credit cards where the bank will take a certain limit of that. So I feel that, definitely if you were to ask me regarding Australia, which is a market I've worked in, the UAE policies for banks make it far easier to get a mortgage than they would be in Australia. A stress rate is basically like the assessment rate that the bank is using when they're calculating the eligibility for the client. Earlier, we touched on, how much can I borrow? Yeah. It's basically 50% of the salary, can be allocated towards the new monthly installment plus any existing loans. When the bank actually works out what the monthly repayment is for the client, they don't actually take into consideration what the actual repayment is because they're actually using a assessment rate or what we call a stress rate, where they've added on. Some banks will do, for example, whatever their variable rate is plus 2%. Yeah. And then they'll work out what the monthly repayment is. So
are they trying to predict that if the rates go up that you can still
afford the loan? Yeah.
That's basically the stress.
So it's actually responsible lending because, if the rates did go up by another 2%, they want to be sure that the client is not over-servicing themselves and they're able to meet their monthly commitment. Interesting
that, we could talk about these kind of places like Australia or Europe or the UK, and they've been lending for hundreds of years. Yes. Was it early 2000s that Dubai started allowing expats to buy? So lending is probably quite a new thing. So in order to do what they've done over the last 20 or so years, they seem to have gone at a very rapid rate of knots to allow and putting systems in place to allow lots of lending. We hear about all these kind of, it is land of opportunity, there's visionary, but we don't often hear about mortgages. We see a lot of the headlines, or certainly I'm seeing a lot of headlines, cash buyers, cash buyers, cash buyers. Contrary, people are lending, right?
Definitely. The banks definitely have an appetite to lend. And it's interesting because when I first came out here 10 years ago, and you talk about the evolution of how, banks have progressed here, there were back then, the policies that existed, they were a little bit more stringent. I'm finding now, we've got, we can get a non-resident who's not even residing in the UAE a loan based on 3 months bank statements. You can get a person who's self-employed, just moved over, and very exciting to see, by the way, that we've had many people come into Dubai setting up new businesses. Historically, it used to be that you needed minimum of 2 years length of business to be able to qualify for a mortgage. Currently, we have a product in the market where someone can come over, set up a business for 6 months, pay themselves a salary, and they may be eligible to get a mortgage. So it definitely shows that, with the vast variety of products available, they're catering for all different segments of the market. And I feel there's definitely an appetite to lend.
You're listening to Dubai Real Estate Unplugged by Haus, award-winning property agency in Dubai.
Charlie, from a sales point of view, what are you seeing? Are you seeing mortgage buyers, cash buyers? What are the teams seeing? I know we work in a lot of expat areas, we work in investor areas. Mortgage or cash?
I think on the apartment side, probably more cash than mortgage, but definitely on like the family home, townhouse, villa communities, we're seeing majority being a finance buyer, mortgage buyer.
And when these finance buyers are coming, probably not to you necessarily, but they're coming to the brokers are asking, that's one of the questions. I'm showing you a property. Do you mind me asking, how are you going to pay for this?
I think most often they'll reach out to their bank first, which is quite a smart thing to do. It's where your salary goes. They'll probably look after you, hopefully. But I think that if we can either give them the option to speak to Tanya or they're speaking to an alternative broker, I think they quite quickly become aware that scanning the market will allow you to potentially get better terms on arguably one of the biggest purchases you'll ever make. And I think it's definitely worth speaking to mortgage brokers such as Tanya, because the advice is ultimately free. Tanya doesn't charge when she picks up the phone. She gives all of the information and allows the client to make the best decision based on what they want. So sorry to drop you in it there, Tanya. I think you might get some calls now to double check your rates, but it's ultimately the case. I think a bit like when you do your car insurance, you don't just go to one company and go on their website. You go to like a Go Compare site and you find the cheapest one, but also the one that has the best terms that's going to protect you should you need it.
That's a good point, Charlie, because it's sometimes not just about, do I have the cheapest offer in the market? Because you have to look at everything overall. You need to look at some of the insurance costs, the upfront costs. There's many aspects to a loan, and unfortunately or fortunately, it is a long-term commitment when you sign up for a loan. So it's not just about, okay, what is the rate I'm getting today? We need to consider the post rate. We need to consider the ongoing, charges of insurance and how is that the best for the client. Also, more importantly, and we're seeing this a lot in the market right now, is that certain banks have what they call a stress rate, okay, when they're calculating the client's eligibility. So we have lenders who assessing rates, their assessment rate is roughly 6.5% versus lenders who are closer to 9%. So with this type, considering this, some clients may not actually be eligible for the cheapest product in the market if that lender is using a very high assessment rate. So that's why it's important to speak to an expert who can understand and do the numbers to see whether or not you do qualify for the mortgage.
Do you often speak to clients that say, well, Tanya, I can actually I've spoken to someone else and they can do it. They can offer me a better product than you because they're looking at that initial rate that maybe is 5% compared to your offering 6%, but the one that's offering 5% hasn't said about A, B, C, D that hasn't been mentioned.
Yeah.
But do you find this when speaking to clients?
Yeah, definitely that does happen.
Okay.
And, it's important then to fully understand their offer. And I always say to clients, let's dissect your offer and go through it. So it might be that, slightly higher on the initial fixed rate, but then when you consider the post rate, the lender I'm suggesting would be maybe cheaper. The processing fee, it could be cheaper as well. So when you consider overall, and it is a long-term commitment, as we said, most people take a 25-year term on the mortgage, I'm able to educate the client and let them see that there is a difference.
You touched on something there that I know genuinely, and I'm not just doing this for the sake of the podcast or for the sake that House and House work with you, but you do really try to educate the client. If I was coming to you saying, Tanya, I want to buy something and you feel it's completely beyond my means, but technically I could still go for it in terms of the numbers, what would you say to me?
I would advise you not to do it.
Which is strange for me to hear, but I genuinely, and Charlie I'm sure can back me up, we know that is the case with you, which means that you don't get a mortgage, which means I don't potentially buy the house with you using you. So it's not a great business model for you.
Not really, no. But look, I'm a big believer on, it's best to be honest with clients because the last thing I want to do is help them realize their dream, but then the reality sets in and they're struggling, with making their monthly installments. So it's not a matter of, look, it might be we can't do this now, but if this happens and if we work towards a higher down payment or, we can put things in place, to sort of help the client work towards that goal where it's going to be achievable, but a lot more comfortable for the client.
I'm going on a tangent here, and we haven't prepared for it, but do you feel they land in Dubai, they see the glitz, they see the glamour, they're going to buy a property for a certain amount and they end up going 10, 20, 30% higher, which probably wouldn't happen in our home countries, but bonuses are given out and salaries and tax-free. Are they spending more than they should?
Sometimes, honestly, I think yes.
Yeah.
And I'm not afraid to tell that to a client.
Okay.
I just feel like, when we speak to a client, we understand their financial situation. So it's pretty raw. We see all the numbers.
You see the credit card, you see the school fees, you see the health.
We see everything. Yeah. So in terms, we see a lot of things. So in terms of that, it's just the last thing we would want to do is put someone under financial distress, where they're buying their dream home, but they're struggling to be able to meet their other financial commitments. benefits to their family, especially. So definitely I don't have an issue in having that conversation with the client.
Charlie, you probably can see that. You're seeing what clients are doing. Are they going beyond their means, do you feel, in terms of, okay, I start looking at a property for 2 million, but I end up offering on one for 4? It's a big jump, right? But it wouldn't probably seem that uncommon to see in Dubai.
Clients increase their budget all the time. For us as a real estate broker to confirm if they're going above and beyond their means, we don't know, because we don't know the numbers like a mortgage broker such as Tanya. But people do get excited. They see what, like you said, 2 million can get them. And then they maybe see something at 3, and then they push that out to 4. And all of a sudden they're rerunning the numbers as they're excited. And it does happen a lot. People increase their budgets periodically over a 4-week period.
Okay, Tanya, I found a property. What is the process?
Okay, so once we have a consultation, I'll understand, what your earnings are, what expenditure you have, what liabilities you have, whether that's a car loan or a personal loan or anything like that.
If I don't tell you the truth, will you find out?
Yes, because for example, if you have loans that you're not going to disclose, the banks will do a credit check. So all of this information will come up.
How long have these credit checks been happening?
A few years back now, yeah. AACB's been around for a few years.
Because I would have thought maybe 10 years ago that maybe it would just be, okay, well, if you tell me you earn this, we hope you do. Or if you had disguised the car loan.
Yeah, no, back when I started, it was always, these.
I know it was really common in the UK that you would get a credit check, but I saw one for the first time here, and I was like, I didn't realize they're tracking me. And then I tracked, it was everything in there. They even had a personal email address that I used probably 10 or 15 years ago in the UK.
Yeah, when I looked, I had a credit card I didn't know about. So yeah, they're pretty good.
That's very common because sometimes, you may have taken up a car loan and with that came a credit card. You never activated it, but it's still showing on the system.
Right. Okay. Yeah. Okay. So you've done the consultation. You've asked us what loans we've got. We've told you the truth, or we maybe haven't told you the truth. What's the next step?
So the next step is I'll be able to make recommendations as to the best products that I feel would meet your requirements. So we send you a proposal with these different options, and then we have another follow-up call to discuss those options and make a decision as to which lender you want to go with.
Would you be asking about the property that I've purchased, and how much detail would you be asking? Would you be asking questions like, okay, have you signed a contract? When does this contract? Because I might need to buy this property and complete within the next 4 weeks. You might give me a lender, which I'm assuming different lenders that work quicker than others.
Definitely. So that is definitely a question we ask. So a lot of the times our clients are already pre-approved. They come to us when they're about to sign the contract. So we just have a glance over that. We make sure that the timing mentioned in the contract is going to be sufficient to complete in time. We ensure that there's sufficient finance clauses to protect the client in case, God forbid, something did go wrong and the bank did not produce a formal final offer. So at that stage, we're able to determine, okay, we have, for example, it's a cash seller. So typically these transactions are a lot faster. We just ensure that there will be enough time based on the approval we've given them, or if we haven't given them an approval, is there enough time to complete in the set time frame of the contract? Because if there's no approval in place, we'll have to allow time to get the approval, do the valuation and meet all the requirements before final offer.
Okay. And if the property is off plan, you can deal with that as well as a residential?
Correct. So very common. I will have clients who are looking to buy something off plan. They will just have an initial chat with us just to make sure that based on their situation today, if nothing changed, they would qualify. And most lenders will, finance at the handover payment for the developer. So it's just important. Of course, if someone is buying something today and it's 2 years away from handover, the situation of the client would need to be similar to what it is today in order for them to qualify. So
typically, what could I borrow on off plan?
On off plan. So it depends on what the payment. So for example, if it's one of those payment schedules where there is construction installments throughout the whole period, it's 50%. Once the client has completed the first 50%, then there are some banks for some of the major developers who will finance the balance of 50%.
Okay, so if I'm buying a property for 2 million, I would need to pay the first million. The bank will take over the second million.
If the payment schedule is as such, where it's, there is the remaining 50% is still, like 10% tranches, for example.
Are people borrowing off plan?
So off plan, typically the transactions we're seeing, people are coming to us at the handover stage, because let's say, for example, you have one of those payment schedules where it's 30% upfront and 70% on handover. Clients would have completed their 30% throughout the construction, and then they're paying the 70% on 70% is due on handover, which the bank then finances.
Okay.
So they will come to us at that handover stage.
Follow House and House on social media and don't miss a beat of Dubai's vibrant property market.
Now, interest rates we seem to be seeing quite often now, whether we pick up a newspaper. Charlie, you're probably hearing about it quite a lot. I looked at Arabian Business the other day, interest rates, Fed rates, US rates. What has that got to do with Dubai? Why are we talking about the Fed rate and the US rate if we're in Dubai?
Yeah, no, good question. I get asked that
Charlie,
all the time.
you must see that.
Yeah, we see it all the time. And I think that the most common thing we're hearing at the minute is rates are high. Rates have gone up so quickly. But I think you're probably the best person to potentially put people's minds at rest that, or in my opinion, it's not high. It's aggressively caught up with where we were probably pre-COVID, maybe a little bit higher, but at the same time, it was very, very good for a while. So now this might seem like a bad rate or a high rate, but it's probably not. It's probably more of a realistic rate for the economy and the market we're in, which is so strong at the moment.
Definitely. So what happened, obviously, we all know what happened during COVID. Rates were really heavily reduced. So back to Luke's question about, why does it matter what's going on in the US? So when the Federal Reserve changes rates, it typically flows on here to our UAE central bank. The reason is, the dirham is pegged to the dollar. So we would have all seen over the last 12 months, a lot of increases happened with the IBOR rate. So the IBOR rate, for those that don't know, is, the UAE central bank base rate that is set by the central bank. So basically what's happened is in the last 12 months, we've had over 4.5% increase in the rate. Very aggressive increases of 0.75 were quite common last year. March this year and May this year, we saw a lot less of an incline of 0.25%. What's interesting is at the back of the May increase of 0.25, many banks actually came out and decreased their fixed rate offerings. So we are still seeing that there are rates, below 5%, fixed for 3 years. They are sort of the most competitive offerings at the moment are the 3-year fixed rates. Whereas if we're looking at the variable rates, they're in excess of 6%. Now, Charlie touched on, during COVID, we had obviously very low rates that were available. And that was done, we needed to do something. Measures were taken during COVID with most countries because, we needed to stimulate the market. There was a crisis going on that we'd never really dealt with. If you compare, other than the period during COVID, where yes, rates were historically the lowest and we were seeing very attractive offers. Prior to that, a good rate would have been a 2-year fixed rate at 4%. We're not far off that. So if you actually pull aside, what happened during COVID, which was obviously a terrible time for everybody, it's realistic that we have these type of rates in the market. And, in terms of where we think rates are going to go for the future, it'd be great to have a crystal ball, but unfortunately, I don't have that. What we are hearing and, speaking to many of the bankers, the outlook and the anticipation is that we may start to see some decline in rates in 2024.
It's interesting that you talk about this because, we're used to these low rates. They have gone up.
Yeah.
It's just media driven, right? If the media weren't talking about this, people need to buy homes. We understand that the price of everything has gone up in life. Yeah. We had a coffee this morning and that's gone up. Everything's gone up.
Worldwide. Rates, in Australia, they hadn't gone up for such a long time. We had, historically low rates and we've been getting increases just about every month.
Is it stopping people borrowing money? Are you getting people saying, well, I could buy it cash, but I would prefer to use the bank's money. But actually, Tanya, look, these rates are too high for me. Surely people aren't saying that.
No, majority of people are still wanting to borrow. Majority of people, obviously with the high rents that are available at the moment, majority of people are wanting to buy their home. A lot of our clients, have end users. I've noticed a real lift in the amount of people who want to buy their own home. 10 years ago, it wasn't like that. So more and more expats are now realizing they don't want to pay high rents. They want to buy their own home. So
that's interesting that you go on to that. You've been here a long time. Have you seen a massive change in mindset that, okay, I'm here for 3 years and then I'm going to leave, but now actually, maybe my kids might go to sixth form here, they may go to university here, or I can retire here.
The typical response when you'd ask someone how long you're here for, years ago was 3 to 5 years or 2 to 5 years. Now, you ask clients, we're not leaving. Most people that I speak to, because when we're working out, all right, is it the right thing for them to be doing in buying their family home? I ask the question, how long do you see yourself here for? And most people now are just saying, we just don't see ourselves leaving. Yeah. And that's a credit obviously to Dubai and such an amazing place to live. Definitely people are not getting discouraged by the rates. Yes, it is a concern. I'm not going to say that people, there's a lot of talk about it and people go to friends' houses for barbecues and they discuss interest rates. Definitely there is a concern. And obviously as the rates were going up so much over the last 12 months, people were starting to be concerned about the rates, but it's definitely not decrease the amount of inquiries we've had.
Because if you're giving that right consultation and you're saying to me, Luke, you are over leveraging, and if there are increases further, you are even going to be in a tighter position. Yep. It is up to me to then take your advice on board and be like, no, I can afford it, and I understand it. This is what we're trying to say to tenants as well when they're, okay, I pay X, Y, Z for my rent, but I've saved a deposit and I'm going to buy. These tenants, you're speaking to a lot of them that are annoyed with their landlords. And
definitely, because obviously we all know the situation at the moment. Yeah. Rents are going up and a lot of people just say, you know what, I do see myself here for the long term. It just doesn't make sense anymore. Help me understand the numbers so I know whether I can afford to do this. Yeah, okay. And a lot of the times people still can afford it, even with the high assessment rates. You have to understand most people have good disposable incomes, and people just are sick and tired of paying rent and they want to go ahead and purchase their home.
If circumstances do change, Tanya, that person that has got a mortgage, they've lived in the property and they move out of the UAE, can they still keep it?
Yeah. So, there's a lot of people think that, you have to close all loans before you leave the UAE. It's definitely a conversation you have to have with the bank. Okay. Some people make the mistake of just leaving or the bank won't know. But, when it comes time to update your Emirates ID, of course, the bank is going to know. So I'm a big believer of, just be transparent with the banks. The banks are okay with you renting the property out. They may charge you a higher rate for being a non-resident, but they're not going to force you to close down. Majority of the banks will not force you to close down the loan, especially if you're transparent and you advise them that, this is my future plan.
Yeah, okay.
On that though, even if you're overseas now, you can still get lending from a Dubai
Absolutely.
bank.
Yeah, absolutely. Most commonly, non-residents, and I can tell you I'm seeing a lot of interest with non-residents, people who are not going to be living here, but they see Dubai as a good investment opportunity. We're getting a lot more inquiries for non-resident mortgages. And the good thing is, and I think I touched on this earlier, with as little as 3-month personal bank statements and profiling the client, we can look at giving them up to 60% finance, which is great. The banks also have an appetite to lend to non-resident clients.
Does anyone, let's say I'm sat in the UK, I've not been to Dubai, but I hear about these kind of 7-8% return on investments. So I think, right, I'm going to reach out to Tanya. Do you get people say, Tanya, before I haven't been there, I haven't found a property, but are you going to be giving me 50 pages to sign, to read through, documentation? Is it going to be 3 to 6 months to try and get a mortgage? Or is it simple? What is your answer to that?
Yeah, so it's a lot of people that I speak to who are non-residents actually feel they can't get a mortgage. They're like, oh, I'm speaking to you because someone said you might be able to help me. When I tell them the amount of documents required, they don't believe. It's like, that can't be right.
But you fill out the documents as well, Tanya, which is, they don't need to even fill them out, right?
No. So what we do is, look, to make the process as efficient and smooth for the client, we ask for certain information that is required for the forms to be filled, and documents. Once the client provides us with these documents, we fill in all the forms and we send them to the clients to sign, and then we submit to the bank and do all the follow-ups with the bank.
If I went to the bank, wouldn't I get a better rate than if I went to you?
No, not necessarily. So look, in some situations, of course, if a client has had a really long relationship with their bank and they have a relationship manager, in some situations, yes, they may be able to offer a better rate. But what I find is with our panel of lenders, in some situations, we're able to negotiate on the rate. In some situations, we're able to negotiate on upfront costs like the processing fees, things like life insurance, like very common. I mean, we have a lender who, if the client has their own life insurance policy and they don't want to pay a separate premium every month, they will actually waive off that requirement. And again, on that, I would only advise the client to do that if they have sufficient cover in place.
Yeah.
To know more about us or to contact our property specialists, visit houseandhouse.com.
I was having a conversation with one of the team's clients the other day, and the question he asked me, I'd love to hear your opinion, is he said, I could buy this cash. I've got 8 million dirhams in my bank. I could buy it cash, but obviously I could also get a mortgage. What's the best thing for me to do?
Yeah.
Is it better to use the bank's money and pay interest rates, or use all of your capital to buy the property?
Yeah.
What do you think?
I feel that if you are in a position to borrow and leverage off the bank's money, it allows you the opportunity to use some of your cash to do other investments, and there's other opportunities. And most people believe that is the best case for them. So it used to be, I remember when I first started out here, it was very common for someone to just pay cash for a property. And it still exists. Obviously, I don't know the percentage, but there are transactions that happen in just cash. But those who are working and they're able to demonstrate to the bank that they're eligible for a loan, they prefer to actually take a loan and use the fund, retain some funds and use that for other investments.
Because then you could turn that 8 million dirhams, rather than buying one property, you could potentially buy 2, 3,
Correct.
Maybe even 4 properties, depending on the price.
Yep.
And then you've got 4 assets in the market increasing in value.
Exactly.
Do you have many clients come to you in those scenarios where they're like, I don't know how best to spread my cash and sort of make the most of it in this market?
Definitely. I mean, in the past, it was, most clients that we were seeing would have one property and one mortgage. Now with the market being the way it is, clients are now starting to not only have their primary home, more and more clients are wanting to invest. They believe in the market and they're wanting to invest in this market. So there are rules or central bank rules that would restrict a client in terms of the lending they're able to do on a second mortgage. But for example, if they've taken, the 80% mortgage that they were eligible for first time round, on a second, third mortgage, it's 60%. So
does it stay at 60% for the third, the fourth, the fifth?
Correct.
Okay.
60%. And in some instances, we have some banks which will allow you to incorporate 60% of the major fees into the mortgage as well.
Sorry, explain that to me, Tanya. I lost you there.
So some banks out in the UAE, so for example, if it's a 60% loan or it's a 70%.
The second property.
Second property, yes.
Yeah.
If it's a 60% for the second property or an 80% for the first, or a 70% if it's above 5 million, there are some banks that will allow you to incorporate the same percentage towards the fees. So, for example, if we're doing a 60% mortgage, we can also add 60% of the Dubai Land Department, 60% of the real estate agency fee, and some of the smaller fees into the loan.
And when you talk about a client, let's say the client's buying for $1 million, do you talk approximately 6, 7, 8% fees?
Yeah, approximately 7%.
By the time they pay the transfer fees, the broker fees,
Correct.
all these kind of
valuation fee, if there's any sort of processing fee.
So you're saying that someone can mortgage 60% of those fees potentially as well?
Of the major fees. So
Of the
typically your Dubai Land Department,
Which
4%,
is-
2% agency, and the mortgage registration fee. Plus
Interesting.
your-
Did you know that, Charlie? I didn't.
Yes, I did. I think it's a really good incentive from the banks and the government to be able to sort of align those fees, because you do need a lot of cash to buy a property in Dubai. And if we scan back to what we were talking about in the UK and Australia, it might be more stringent to get a mortgage, but you can definitely get one without as much cash in your pocket. So I think that's where the UAE kind of protects itself against lending to people that can fulfill the mortgage payment.
That's something actually that someone asked me the other day. Am I better to go in for a fixed or a variable? And I suppose, is it right with the variable you could pay it off sooner and there's not going to be the penalties?
No, so both options, you're allowed to pay off the loan anytime. The penalty is 1% with a cap of 10,000 dirhams, whether you're on a fixed or on a variable. So
is that definitely, can banks charge more than 10,000 dirhams?
This will be outlined in the contract, the final offer letter, and it is 1% with a cap of 10,000. So in the past, we did see a stage where the central bank did allow banks to sort of set different type of penalties, but we've gone back, thankfully, to the 1% capped at 10,000. One thing to also add is that many banks do offer the client an opportunity to make a free partial payment on their mortgage each calendar year, and that'll be a percentage. It generally varies from 15% to 30%.
So you could pay 15 to 30% off your loan and you're not going to have a penalty for it?
Correct, if that contract allows you. So it depends on the lender, but there are definitely options in the market to allow you to do that each calendar year.
The feeling I generally get at the moment, and I was speaking to someone about the visa situation recently, one thing that I've, is a kind of, I don't know whether it's more of an old school thing, but it's buy your house and pay your mortgage off. Do you still feel when you speak to clients that this is the end goal, I want to pay it off? Or do you find now mindsets change? People are now living here longer. People live for today. Let me buy a house and then I'm going to buy another one and then I'm going to leverage and do this and do this. Are people not gambling necessarily? Maybe that's not quite the right word, Charlie.
Probably. I'd say maybe.
You know what I'm getting at?
More leveraging.
Yeah, I think that's why I asked the question earlier in regards to sort of using the bank's money or using your own physical cash. And I think that if you look at any sort of wealthy person, the thing they always hit home is use other people's money. Don't use your own. Pay the interest. As long as you're earning money on top of the interest, keep your money and spread that as far as you can, because more than one asset creates wealth.
Absolutely, especially with the equity growth opportunities. So in answer to that, I think more and more people are leveraging.
No, it's interesting. I was speaking to a client that bought the other day, and he was buying cash, but he was extremely happy that I do not have a monthly repayment to be make after this. So maybe it just feels that comfort that if something does happen, then, there's no payments.
As we were saying a moment ago about the rates, I think as a buyer in this market, something that we deal with quite a lot is I just don't know when the right time to secure a mortgage is. Are the rates going to go up? Are the rates going to go down? Is there an element of overthinking that? Like the difference between 5 and 5.5 or 4.5 and 5, does it make that much of a difference when buying a house when the market prices are increasing anyway?
No, it doesn't, because when as you said, when the prices are going up, I mean, it's a minimal increase in repayment versus potentially what the client will be facing if they wait on purchasing. I've seen this a lot. I've had clients who a year ago felt the market was going to go down. They were waiting. They've re-entered the market now, and unfortunately, the prices have gone up.
So basically, what they could have bought for, they are now going to buy a lot more, and the rates are also quite a bit more.
Yeah, I mean, slightly more. I mean, definitely if you're looking at the last few months, I've also had clients that maybe earlier in the year just wanted to hold out. Yes, there's been slight reductions in rates in some of the fixed rate offerings that were there, but very small reductions. But then I know in some areas the market's moved up quite considerably.
And you're speaking to these banks. I don't know anyone who's more in touch with the banks than you. And even if we were talking on such a public platform, you'd say to me, I can't tell you for sure, Charlie. So if you don't know, how is anyone else supposed to know?
Absolutely. I mean, it's one of those things that no one can honestly say, I know the answer to this and we can predict it, because again, as I said, if I had a crystal ball, we can only sort of look at, what's been happening. And again, May's increase the variable. We saw a reduction in fixed rates. It's a positive sign.
Would you think it, and I'm not saying that you need to answer this correctly because it's kind of a wayward question, but I would be thinking if I'm borrowing in the UAE, I'm going to track what's going on in the US because we're following the dollar, we're pegged to the dollar. So let's maybe have a look at maybe market news, what's happening with there, because we tend to follow. Do you find clients do that?
Definitely. So whenever we have a conversation, some clients are following what's going on with rates, and they'll say, oh, we've heard that the Federal Reserve in the US is going to be increasing rates. How does that affect us here? So definitely people are aware, because the dirham is pegged to the dollar, that a lot of what's happening in the US is going to have a flow-on effect with us.
Yeah, brilliant. Thank you ever so much, Tanya, fountain of knowledge. And thank you to all of our listeners for joining us today. Don't forget to subscribe, whatever channel you're listening on, so where you are notified when we drop new episodes. And you can follow us at Haus & Haus on Instagram, Facebook and LinkedIn. Thanks and cheerio, goodbye.
Dubai Real Estate Unplugged. Finding this information helpful? Share this episode with friends and family to help them in their property journey. To know more about us or to contact our property specialists, visit hausandhaus.com.